Hey everyone, welcome back to Corporate Decoder, the place where we unravel the complex world of business reports with a smirk and a wink. Today we're diving deep into Minerals Technologies Incorporated's annual report for 2025. And let me tell you, there are some interesting numbers and events packed into this one. Before we get started, if you love getting these kinds of straight-talking insider looks at corporate filings, make sure you hit that subscribe button. We're building a community that gets the real story behind the numbers. And if you want to chat with fellow investors and get more exclusive insights, join our Discord linked right below. Alright, let's get straight into what Minerals Technologies Incorporated, or MTI, is telling us. This company is basically a giant in the world of specialty minerals, and they are the biggest producer globally of bentonite and a top player in calcium carbonate. Think about it, everything from the kitty litter you buy to the paper you print on, and even the roads you drive on might have their materials in them. They are vertically integrated, meaning they control the whole process from digging the minerals out of the ground to getting them to the customer. Very smart. So looking at their finances for 2025, they brought in about $2.1 billion in sales. That is a slight dip of 2% from the year before. Now, a small dip like that might not sound like much, but when you are talking about billions, every percentage point is a lot of money. The big news though is their income from operations, which was only $47.4 million. That is a massive drop of 83% compared to 2024, where they made over $286 million. What happened here? Big drama. It looks like a huge chunk of that drop is due to something called a provision for litigation accrual and credit losses. In 2025, they set aside a staggering $215 million for this. They explain it is to handle estimated costs for a trust to resolve all current and future talc-related claims. Old lawsuits from selling talc products through a subsidiary called BMI Oldco Incorporated. This sounds like a very expensive legal headache that is really impacting their bottom line right now. They also paid out another $30 million related to a loan for this subsidiary. On top of that, they had $19.6 million in other litigation expenses. So clearly the talc lawsuits are a major story here, impacting their financial health significantly. Because of all these extraordinary costs, their net loss for 2025 was $18.4 million. That is right, a loss after making over $167 million in profit in 2024. This is a huge swing, and the talc litigation is definitely the main culprit behind this dramatic shift. The earnings per share went from a positive $5.17 in 2024 to a negative $0.59 in 2025. That is a really bad sign for shareholders. Let's break down how their different business parts are doing. Their consumer and specialties segment, which includes things like cat litter and personal care products, saw sales drop by 4% to about $1.1 billion. Their household and personal care sales dipped mainly because of tough competition in the cat litter market. The specialty additives part of this segment saw sales fall too because of a slowdown in residential construction and the paper industry. The income from operations for this whole segment dropped from $165.5 million in 2024 to $124.2 million in 2025. They mentioned some restructuring costs here, so they are trying to streamline things, but the market challenges are clear. Now, for their engineered solutions segment, which handles high temperature technologies and environmental infrastructure solutions, sales were pretty much flat down, just slightly to $974.9 million. Their high temperature technologies part, which serves industries like steel and foundries, saw a small drop in sales, though they did see strong growth in their foundry business in Asia. The environmental and infrastructure part actually saw a small increase in sales driven by demand for lining systems and drilling products. Their income from operations in this segment was $169.7 million, which is a small decrease from 2024, but still very strong. Importantly, this segment was offset by a $9.9 million gain from selling some assets in China and South Africa, which helped cushion the blow of other costs. Looking at where their sales come from, the United States accounted for 52% of their total sales in 2025, that is about $1.1 billion. Their international sales made up the other 48% at nearly $1 billion. International sales actually decreased by 3%, while US sales were down only 1%. So while both are down, international sales are taking a bit more of a hit this year. On the shareholder side of things, they repurchased about 1 million shares in 2025 for around $61 million. They have a buyback program authorized for up to $200 million, so they have plenty of room to continue buying back their own stock, if they choose to. This can sometimes be a good sign indicating management believes the stock is undervalued. Compensation for executives is heavily tied to stock. We see significant numbers here for stock options and restricted stock units. For instance, in 2025, they granted over 174,000 stock options with an average price of $76.75. This shows that executive compensation is being linked directly to the company's stock performance, which is common practice. The total value of stock options outstanding at the end of 2025 was over 1.5 million, with an average exercise price of $67.16. They have over 1.2 million shares remaining available for future grants under their equity plans. Now, for a really important number, the company's mineral reserves. They have over 159 million tons of proven and probable reserves for sodium bentonite and over 6.4 million tons for calcium bentonite. That is a lot of raw material. They are estimating they have over 50 years of commercially usable reserves for sodium bentonite and over 28 years for limestone. This long-term supply of raw materials is a major strength for their business, making them less vulnerable to supply shortages and price spikes compared to competitors who don't own their own reserves. Now let's talk about the risks. They mention the usual suspects like worldwide economic conditions, intense competition, and potential disruptions from doing business internationally. A big one for them is the cyclical nature of their customers' businesses, like paper manufacturing and metal casting. Periods of recession can really hurt demand. They also highlight the risk of failing to renew their long-term sales contracts for their satellite operations, which account for a significant portion of their specialty additives business. And of course, there is the ever-present threat of cyber attacks, a risk for almost every company today. Returning to the talc issue, the report clarifies that the subsidiary responsible BMI Oldco Incorporated and its affiliate filed for Chapter 11 bankruptcy protection to deal with these talc liabilities. This means that the parent company Minerals Technologies Incorporated is not directly included in the bankruptcy, so it is being deconsolidated from their financials. But get this, they recorded an accrual of $215 million in the first quarter of 2025 to fund a trust to resolve all current and future talc claims. This is a massive number, and they admit they can't estimate the full loss beyond this amount. The auditor KPMG flagged this talc litigation liability as a critical audit matter requiring complex judgments. This is a huge ongoing financial risk for the company, and it will be very interesting to see how this plays out. So what does all this mean for Minerals Technologies Incorporated? Their 2025 was defined by that enormous legal provision. While sales remained relatively stable, their profitability was absolutely crushed by the talc litigation costs. The company is stressing its strategy of innovation growth through acquisitions and operational excellence. They did see some positive organic growth in areas like their environmental infrastructure solutions and strong performance in their Asian foundry business. However, the talc liability is a giant shadow hanging over them. It is not just about the money, it is about the uncertainty and the potential for future costs that are still unknown. While they have substantial mineral reserves and a diverse business portfolio, mitigating the impact of this one issue is critical. They are trying to manage their debt well and maintain liquidity, which is good, but the talc claims are a major wild card. In conclusion, Minerals Technologies Incorporated is a fundamentally strong company with excellent market positions and valuable mineral reserves. But they are facing a significant challenge with the talc litigation that has severely impacted their 2025 financial results and introduced a great deal of uncertainty. Moving forward, investors will be watching closely to see how they navigate this legal and financial minefield. Their ability to overcome this will determine their future financial health. Alright, that is our deep dive into Minerals Technologies Incorporated's 2025 annual report. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.